Hey, what's up guys? John here. JP Morgan Chase is the largest bank in America, and they just issued a dire warning about the future of this country. They said we're walking into something far worse than a recession.
Jamie Dimon expressed concern about the resilience of the U.S. economy because he believes it's being fueled by government spending.
Now, JP Morgan Chase, they move $10 trillion of money every single day.
If you want to do what JP Morgan does, we move $10 trillion of money around the world every day.
In 3.5 days, they'll move the entire debt of the U.S. government. They bank 30 countries, the IMF, and the entire U.S. government.
We bank some of these companies in 30 countries. We bank the World Bank, the IMF. We bank the United States government.
So you start to look at how big this company is. And when their CEO says that we're walking into this, I wouldn't disregard it as, unlikely. I would say that it's more likely than not going to happen.
Dimon says that inflation and high interest rates may be sticking around longer than most think.
And when you look at the facts and you look at the events that have already been signed into law, what they're already working on, you'll realize that everything about this country is going to change, and in a very radical way. Well, in this video, I'm going to show you step by step how this is all going to work and what you can do to shield yourself from some of the insanity. Whether you have $1,000 or $1 million or whatever you have, there's things you can do. And I think that we're walking into a situation where those that are preparing and putting themselves in a really good position, they're going to be rewarded for it. I'd also like to take a moment and say thank you to everyone. We just hit 300,000 subscribers. I really appreciate it, and work really hard on these videos. If you could subscribe, I would really appreciate it. Take a look at this. So CEO JP Morgan warns U.S. economic fate worse than a recession, the worst outcome. And what he essentially said is that it's going to be stagflation. Essentially, it's going to be where the economic growth slows while inflation and unemployment rise. So everything is going to get more expensive, but there's going to be less economic output, less ability to actually pay for it. So people are just going to reduce their living standards dramatically in this country. Now, as that begins to happen, it's going to work perfectly because they have a second stage, which is going to be ushered in, which at that point, it's going to be very hard for 200, 300 million Americans to be able to avoid this alternative. Now, look at this. JP Morgan Chase, they're a $3.5 trillion company. Now, U.S. locks in steep tariffs. This happened yesterday. And so as we're walking into a big shift in America, we decide, September 27th, we're going to lock in 100% duty on Chinese EVs, 50% on solar cells, 25% on steel, aluminum, EV batteries, key minerals, also sanctions on other countries, Russia, Saudi Arabia, different countries. We're putting ourselves in a position to where our costs are likely going to be continuing to go up. In addition, we're walking into a green energy movement, which is likely going to push the cost of fossil fuels and basic energy up. So everything is going up around us, and our dollar is losing more and more power by the day. So as we're walking into this scenario, I think it makes sense to take it back maybe a year or two and look at how these events are going. It says the dollar's coming slide will be welcomed by the world. March 29th, 2023, Bloomberg. Then you have a natural desire to diversify. Janet Yellen says America should anticipate a decline in USD as the world reserve currency. 2023, September 24th. September 24th. So they're slowly dropping these cues that are these clues that we're going to walk into a different type of global reserve currency, potentially, where many other countries start to diversify and pull away from the dollar. So as that begins to happen, our worlds change. Here it says US dollar slides as traders bet on 50 basis point rate cut, right? You have here the Fed has proof it once, the inflation's slowing, but the next move is still up in the air. Deloitte, you look at Deloitte, their revenue growth is the weakest in 14 years. So you're seeing all of these changes, seeing the job market go through a really big change. US job openings data has been revised down in 15 of the last 19 months, the longest streak since the GFC, the Great Financial Crisis. The number of job vacancies has been regularly revised down over the last 18 months, with the largest adjustments reaching 500,000. The most recent release was June, was lowered by a massive 274,000 openings. from the original reported 8.18 million, the fourth largest revision since 2020. Meanwhile, job openings in July came in at 7.67 million, slowest since 2021. Right? So you start to look at this, everything is changing for America. Here, BRICS, 126 nations meet in an alliance to discuss ditching the dollar. Came out about a week and a half ago. You have BRICS, 34 countries have expressed desire to join. It's more and more countries as time goes. Even here, CNN says, build up your portfolio with BRICS. Then you have BlackRock had invested $420 million across 5 funds into Chinese companies. So they're essentially taking retirees' pension funds and investing it in the future of another country. How crazy. This is what's happening. So when you have BlackRock doing it, you have Ray Dalio, Bridgewater and Associates, investing in China. You have Blackstone investing, their Shanghai office, they're expanding, signaling increased investment in China. You have the deep pockets leaving. You have the deep pockets looking to, take some risk off the table here in America. Why? Well, it's because everything is about to change in America. For example, we have $10 trillion in US government bonds for sale this year. And in addition to this, a record $8.9 trillion of US government debt will mature over the next year. See the chart below. The government budget deficit in 2024 will be $1.4 trillion, according to the CBO. And the Fed has been running down a balance sheet of about $60 billion a month. Now, the bottom line is that someone will need to buy more than $10 trillion in government bonds in 2024. That is more than 1/3 of US government debt outstanding. Repeat that trend every year for the foreseeable future. That's almost $11 trillion every year until 2030. That's happening at a time when foreign investors have been shrinking their ownership in US bonds since 2015. So countries are pulling away from us. They're pulling away from us. How is everything going to remain, how things were in the last 5, 10, 15, 20 years in America? It's not. It's not. We're walking into a major shift. And we're spending like drunken sailors in this country. US national debt rising by $1 trillion every 100 days. And you look at this is very, very fascinating. So CNN put out an article saying a $7 trillion boost to the economy, talking about, newcomers and people that are entering America. And then they say here, because of migration trends, the U.S. is on pace to have 1.7 million more people in its pool of workers this year compared to what the CBO estimated last year. In the next 9 years, the CBO now estimates that the pool will have 5.2 million workers, more than it estimated last year. So you have 5.2 million additional workers. You're going to have this big push towards AI, robotics, job outsourcing. We're going to see a fall in wages, but yet we have household debt at levels which we've never before seen. How are we not walking into a crisis inside of middle class America, right? How are we not? Now, what I find very fascinating is when you go on websites like, the Council of Foreign Relations, you can see the URL right there. This is the future of the US dollar, 2020. And they said, that panelists discussed post-19 role in the US dollar, options for alternative currencies, and the impact of US economic and foreign policy on both. So they start talking about this, and just for context, when and if this does happen, which I believe it's going to, I think it's a matter of time. They say less access, America's going to have less access to capital, higher borrowing costs, higher interest rates, and lower stock market valuations. Most Americans have a large chunk of their net worth in the stock market. They have a large chunk of their net worth in their home value. And so if the cost to borrow continues to rise and insurance and taxes go up with it, you could imagine what that will likely mean to one's net worth, right? It's going to continue to shrink. Now, what I think is very fascinating is this conversation around sustainability, inequity, inequality, all the injustices of the world. All these, terms and these conversations are, I would say, more in your face today than they have been ever. The last 5 years, it's been more and more and more every year. Now, when you look at what the proposed solution is, it really kind of connects perfectly with where we're all going in as a country. So it says, how will the government reduce inequality? Governments can reduce inequality through tax relief and income support or transfers, government programs like welfare, free healthcare, and food stamps. So many people, they'll hear the word, combating inequality, and they think, we're going to tax the rich. The rich don't pay taxes, right? They have teams of attorneys. They have offshore asset protection trusts. They set up their businesses in Ireland and these different locations. They're smart. They're not going to write a $20, $50, $100 billion check to the US government. Right? They show a net loss, or they show very little profit every single year, right? That's why they're big. It's the middle class that pays taxes. And so when they need to, fund the middle class, how are they going to do it? They're going to be increasing taxes. And so as they increase taxes to combat inequality, you could just imagine that inequality will likely grow, right? And so I found this very interesting because this is on congress.gov. This was proposed in 2021, July 1st. And many people thought stimulus programs are going to be, a one and done thing. I was never in that camp. I thought this was the beginning. This is the beginning of major change in America that will never, it will never end. It's just going to get more and more radical every year. Then, this bill, it just solidifies that. This bill directs the Department of Health and Human Services to adapt and implement a 3-year pilot program to provide a guaranteed monthly income to individual taxpayers between the ages of 18 and 65. HHS must consult with the IRS and certain nonpartisan nonprofit agencies and academic institutions with expertise in social science experimentation to develop and award income subsidies to eligible taxpayers to conduct a study on the outcome of the program. This is a federal move on congress.gov, right? You look here, over the last 2 weeks, universal basic income, what UBI is, how it works, how it would affect the economy. Oregon residents will vote in November on a $1,600 annual universal basic income. Forget free cash. There's an even more American way to help people. And it's essentially guaranteed jobs by the government. This is what they're saying here. Guaranteed jobs by the government. It's a paywall. I'm not going to pay them. But guaranteed jobs by the government. That's what they want, right? So it's a major expansion. It's a major expansion of the government and a major change for middle-class America. So you look at this, you have 50 cities and counties that have UBI programs as of last week, September 3rd, last 11 days, almost a week and a half, right? You have all of these conversations, NBC, money.com, it's Foundation of Government Accountability. Everyone is talking about UBI, everyone. And it's just very clear. As the dollar loses purchasing power, as things get more and more and more expensive, people are going to demand help. That's what's going to happen. They're going to demand help. And what I think is likely going to happen is I think as the world enters more uncertainty, we're going to see a rush into gold and silver. And this is not a sponsored video, but I think we're going to see a rush into gold and silver, land. I think we're going to see a rush into assets that are going to hold value. That's what I think. I mean, they're saying OpenAI's O1 predicts gold price. They're saying that it's going to be $2,100 an ounce, while the aggressive sees commodity about 3,200. Look, who knows? Who knows where and how high gold will go? But I think the dollar is only going one way in the long term. It's going down, and precious metals, land, and alternative investments are going to be doing a lot better. I think another great investment is likely going to be, for entrepreneurs and business owners and people that, have somewhat of a higher net worth, is likely going to be, investing in a secondary citizenship, probably taking some risk off the table here in America. Now, I love America. I want to be very, very clear. I love America. I don't like the direction in which it's going. I think America is heading into a really, really dark place. And if you have the ability to, learn about another country, learn about another citizenship, it might benefit you. It might benefit you. And some of these locations, Vanuatu, St. Lucia, Dominica, Malta, St. Kitts, Nevis, Grenada, Antigua, Barbuda, there's tons. There's tons of them. There's some of them you can get, Malta's expensive, but even some are, you can, like Portugal and other locations, you can, invest a couple $100,000 and get a little condo. It's not like you're paying fully for the citizenship. You have to invest there. You have to hit certain requirements and you can do it. In some other places, just residency. You can get a residency. And, it's an easy way to, take some risk off the table here in America, and it's less expensive. But I think what we're going to see here is a major change in America. That's what I think we're walking into. I think Jamie Dimon is leading us into major change. I mean, he's telling us that it's going to be worse than a recession. CEO of JP Morgan warns U.S. economic fate worse than a recession, the worst outcome. And they're talking about the 1970s, right? What happened in the 1970s with gold? It went absolutely crazy. That's what happened. What do you think about this entire situation? Where do you see all of this going? Where do you see America going? Do you think we're going to see a scenario where we're going to walk into a universal basic income? We're going to walk into just an overall change of everything that is America? Let's talk about it below and catch you next video.